Hello everyone, welcome to my channel where I talk about personal finance. Today I'm going to talk about Dow Drops 700 points. Let's get into the video. The Dow drops 700 points for worst day of 2025. There is fears about economic growth. It was a bad Friday for the stock market, and the question may arise, which is, should investors be concerned? I would say yes and no. Mainly no, because you should be investing for the long haul, which should be 10 to 15 years at least, because the stock market will have swings. So on Friday, February 21st, 2025, the US stock market experienced a significant downturn, with the Dow Jones Industrial Average plummeting 748 points or 1.7%, making it worst day of the year. This sharp decline erased gains made since President Donald Trump inauguration in testifying concerns over the economy trajectory. The S&P 500 and Nasdaq com- composite indicates also faced substantial losses, dropping 1.7% and 2.2% respectively. Small cap stocks, represented by the Russell 2000, experienced even steeper decline, reflecting widespread apprehension among investors. Economic indicators fueling the decline. Several economic reports released on Friday contributed to the market's downturn. Consumer sentiment. The University of Michigan's Consumer Sentiment Index fell by 10% to 64.7, indicating growing permission among consumers. Business activity. The S&P 500 Global US Services PMI dropped below the 50 mark, signaling a contraction in the service sector. Inflation expectations. Consumers' inflation expectations over the next 5 years rose to 3.5%, the highest since 1995, suggesting concerns about rising prices. These indicators suggest a potential slowdown in economic growth coupled with rising inflation, a combination reminiscent of the 1970s stagflation era. Impact of tariffs and policy uncertainty. Investor sentiment has been further dampened by concerns over President Trump's trade policies, particularly the imposition of tariffs. Businesses and consumers alike are wary of the potential for increased costs and disrupt supply chains. Reports indicate that tariffs are contributing to anticipated price hikes, adding to inflationary pressures. Sector specific impacts. Certain sectors and companies have been notably affected. Healthcare. United Healthcare Group's stock dropped 8% amid a Department of Justice investigation into alleged manipulation of patient diagnosis to secure higher Medicare Advantage payments. Retail. Major retail stores like Walmart have reported weaker than expected earnings, with Walmart's disappointing guidance contributing to market jitters. Investors respond and market outlook. In response to the mounting economic uncertainties, investors are shifting towards safer assets. Treasury yields have declined as demand for government bonds increases, reflecting a cautious approach to the current market volatility. Despite the recent downturn, some analysts remain optimistic about the market's resilience. Factors such as strong earning growth and potential interest rate cuts by the Federal Reserve are viewed as possible stabilizing forces. However, the convergence of slowing business activity, rising inflation expectation, and policy-induced uncertainties presents a complex landscape for investors. As the situation evolves, market participants will need to stay informed and adapt to the dynamic economic environment. Thanks for watching this video and do not forget to subscribe to my channel.